This video is based on the technical analysis of HK50, which we also refer to as HSI. And at this point in time, as you guys can see, we find ourselves on the monthly chart. And just to recap, guys, the last few times we spoke about this particular index, we had mentioned that the market had given us this huge double top, which had had a neckline at that point, and we saw price at this level closing sufficiently below the neckline, and then in the future coming back to the neckline to test it. And at that point where the neckline is where we should have looked for those potential sell opportunities. Now this M structure or double top has played itself out, and we also spoke about how the market had given us this inverted head and shoulders pattern, with this side being the left shoulder, this being the head, and this area over here being the right hand shoulder. However, we can see that the market actually struggled in regards to actually pushing further up on the right shoulder of this inverted head and shoulders pattern. And for the last couple of weeks, it has been actually, rather moving down as opposed to continuing with that pattern. And at this point in time, because we have some choppiness in and around the right hand shoulder of the head and shoulders pattern, I would say that we should disregard this pattern, right? And that is because, as I've said, we have a lot of choppiness in regards to this area, which is the right hand shoulder of that inverted head and shoulders pattern. So what else do we see, guys? Now that we spoke about how we had this M structure, we spoke about how we had this inverted head and shoulders pattern. Now we can see that price has actually given us an overextended M formation or double top over here, which also has a neckline at that point. And what this means, guys, is that ideally we want to see price at this level break into the bottom side, heading back up to the neckline to test it. And at that neckline, as you guys know, is where we would look for those potential sell opportunities, especially if, as I always say, the neckline aligns with any key numbers that we have in regards to the Fibonacci retracement tool, right? So from here, what I'm going to do, guys, is head down to the weekly chart, and let's have a look in terms of what's going on down there. And just to recap, guys, remember on the monthly chart, we spoke about how the market had given us this overextended double top. And by the way, it is an overextended double top because that first leg is much higher than the second leg. And what we want to see happen actually is price closing sufficiently below the neckline and heading back to the neckline to test it. And as I said, if price does that and the neckline aligns with any key numbers that we have in regards to the Fibonacci retracement tool, especially the 50% as well as the 61.8%, we would then look for those potential sell opportunities. And if we do indeed find any good opportunities at this point, I believe that our take profit should be around this level. Why do I say that level? That is because that's exactly where this double top started. It started at this point, right? Gave us the structure, and if it does happen, right, it'll end at that level to complete that structure. I hope you guys can see that, right? But what else do we see in regards to the weekly chart? I don't really see much at this point. Let's head down to the daily chart and let's have a look in terms of what's going on down there. And as we had said, on the weekly chart and the monthly chart, we have this huge overextended, or rather multi-session double top with a neckline at that point, and the anticipation is for price to actually move further down, right? But let's zoom in and see what's happening here in regards to the daily chart. In regards to the daily chart, we can see that the market is in a downward trajectory, or it's in a downward trend, and it confirms that indeed we should be looking for those potential sell opportunities, right? Nonetheless, as much as the market has given us that double top, right, on the daily chart we can also see that we have what seems to be an opposing structure, and this opposing structure is actually this double bottom over here, which has a neckline at that point, right? To add to that, we have another smaller W structure over here, which similarly has a neckline at that point. So what may possibly happen at this point in time is that because price is at a very strong level of resistance, which is the neckline of that huge double top that we spoke about, we may see the market actually from this level move further down to around where we have the neckline of this W structure. And at this point, we may potentially see the market continue to move further up. Or what may happen is the market may move only to about this level, only to push further down. And that is because, remember, guys, on the bigger time frames, we have that M structure, and price is just below the neckline. And I said that we want to see price actually head up to the neckline to test it. And where we have that neckline is where we want to see the market move further down to close in line with where that structure had started, right? But what I'm doing at this point in time is just showing you some of the outcomes that we may encounter in as far as HK50 is concerned. And as I've said, guys, as much as the anticipation is for price to move further down, we may only see price hit down to the neckline of this W structure over here, only to from this level move further up. Because also remember, as much as we have, as I said, this W structure over here, we also have this huge W structure over here, which has a neckline at that point. In fact, in hindsight, I would say that buying or selling within this region is actually tricky and risky. Why do I say so? That is because remember, guys, we have that huge double top with a neckline at that point. To add to this, we also have this W structure, and similarly, it has a neckline at that level. So what this means, as I said, is that buying or selling within this region over here is actually very, very risky, as we may see a situation where price actually, right, from this level pushes further down because we have this huge M structure, or the market may only push down to around this level, which is where we have the neckline of the W structure, right? And at that level, we may see then the market continue to move up to complete this huge W structure, as you guys can see. I hope you guys can see that, and I hope that that makes sense, right? But what else do we see in regards to the daily chart? On the daily chart, we can also see that we have what seems to be a gap at that point. And as I always say, guys, gaps represent liquidity, and liquidity actually money that needs to be triggered by the market at one point or another. To add to this, remember, I always speak about how whenever we have these W structures, a lot of traders and investors buy on that second leg, right? And they place their stop losses just below that W structure. So we have a lot of money stuck here in the form of stop losses, and it is quite possible that we may see price from where it is actually move further down to disregard the neckline of this W structure, only to move further down to grab all of those liquidity points or those stop losses. To add to this, we also have this candlestick over here, and what it is a bearish candlestick with a small body and quite a long lower wick. And by now you guys know that that means that we have a lot of liquidity there, right? So we have a lot of money stuck at that level, right? We have a lot of money stuck here due to that candlestick, as well as the stop losses that are just located below that W structure, right? So we just need to be careful. Anyway, from here, let's head down to the H4 chart and see what's happening down there. And here we are on the H4 chart. And again, guys, just to recap, remember on the daily chart, we spoke about this huge W structure. To add to that, we spoke about that the market had given us this smaller W structure with a neckline over here, and we said we may see price head down to this level, and at this level is where we may see the market again move further up. So we just need to be careful. And in as far as buying or selling at this point, I don't see any actual buying or selling opportunities, but nonetheless, we can also see, as I said, that we have a gap over here. It's better visible actually on the H4 chart, right? And on the daily chart as well, we have, remember this W structure, but on the H4 chart, we can see that it has expressed itself as a triple bottom, right, with a neckline over there, right? So a triple bottom and a W structure are actually one and the same thing, really. The only difference is that a triple bottom actually has an extra leg over here. So if you were to remove this extra leg, you will still have a W structure, and the same principles apply, right? Where we have a lot of people actually buying at this point and um, placing their stop losses just below here. I hope you guys can see that, right? But just to zoom in again, guys, let me just actually zoom in a bit, right? Just to zoom in as far as buying or selling goes, at this point, I don't see any opportunities. However, as I said, we may potentially see the market move to the neckline over here of this triple bottom, and at this point we may then continue to see the market move further up or even further down to close this gap, because gaps are also, as I said, areas of liquidity to grab the liquidity associated with a candlestick and to grab the stop losses that are sitting over here.